This is Greg Clark, and I'm going to highlight some of the things that you've read in the chapter one, as well as what you were given in the PowerPoint. Why study finance? At the end of the day, let's face it, finance is the engineering piece of business. It really is. It underpins everything that you do in marketing, from budgets to marketing research. Obviously it's in the day-to-day accounting functions, the preparation of financial statements for a company. Certainly from a management standpoint, you cannot strategically think and execute without regard to your company finances. And certainly from a personal standpoint, the understanding of finance allows you to better manage your cash flows on a day-to-day basis, as well as budgeting for future assets, as well as education and such like that, family planning. I like this when we talk about different opportunities within finance. I like this one from the standpoint of a corporation. It shows you the importance, certainly at the vice presidential, the CFO function, but also you get into understanding the functions of a treasurer and a controller and the different functions that cascade off of those. This is a very good graph. It's showing that some of the variety of job opportunities in a corporate structure. I think one of the things that's really important, though, just finished up a book by Thomas Friedman on That Was Us. Great book that really talks about getting back to some of the foundations that we have as a country, and one of them is the not just looking for a job out there, looking for somebody to hire us, but also having the ability to start a business. It's what's made us strong. Certainly, there's hundreds of examples that we've had here during the last decade. It's easier today to start a business and be successful than ever before. The costs are lower than ever before, with the ability to utilize the web and the power of that. But when you take a look at forming an organization, either it be sole proprietorship, partnership, or corporation, and each one of these have their different tax implications. All of them, though, do demand at some level. You don't have to be CFO, you don't have to be a CPA, but certainly if you hire and have to use the services of these people, it really does demand on your part as an entrepreneur to at least have a basic understanding of that engineering, that financial engineering that underpins your business. The goal of financial management, really it is to maximize the current value per share of the company's existing stocks. Certainly that's depending on how you've organized your own corporation, or if you are part of a corporation that has issued stock. But at the end of the day, there are people, you have to realize, people have put down risk capital. A bank is risking other people's money, quite frankly, by investing in you. A venture capitalist has pooled money together from the Mitt Romneys of the world and is investing it on behalf of them, and certainly demands a return that's equal to the amount of risk involved, as well as the potential of the company to return some level of value to its stockholders. So definitely this is the goal of financial management overall. The other thing that certainly rubs up against this, though, is the ethical portion of how far do you go. Certainly we're going to be covering more of that. Certainly you're going to be covering that in some of the assignments and practices. But it's an important question to answer, because certainly in the American form of capitalism, there is a creative, destructive nature to it, where businesses that no longer are sustainable from the standpoint of providing value, they no longer provide value, that can't make it, they are churned under, and new businesses come out of that. But the problem that a government and a country always faces, and that is how do you protect the people? and at some point you rub up against the ethical piece, and certainly in financial management, driven by the mission that all corporations, all companies really should be for sustainability portions. If you're not profitable, you're not going to be sustainable. It rubs up against the ethics part of how you treat your people and how how you deal with those issues. Very important ones. This is a great example here, kind of standing on the balcony of how the cash flows interact between financial markets and the company itself. Again, when you take a look at a balance sheet, and we'll get into that in chapter 2, you're really looking at the assets on the left side. They have to be paid for in some manner. And so somebody has to sign up and give you money. If it's a bank, it's an interest rate, it's a period of time. If it's a venture capitalist, or if it's somebody who wants to buy a share of your stock, it's the equity portion. So assets always equal liabilities plus equity, because you've got to pay for those assets somehow. So that's the left, that's the right. This is how it flows, A through F. A great, great explanation. And that's about it. Hope you enjoyed chapter 1. We'll move on to chapter 2. Thank you.